Hello everyone, welcome to CAIIB English Medium. This is Aarti and I hope you all are doing good. So if you are also preparing for CAIIB June 25 attempt, then this series are very important for you because in this series we are completing your concepts. Along with that we are solving MCQs as per your exam pattern. And remember, if you are not a subscriber of this particular channel, you can subscribe it, you can share with your fellow bankers who are preparing for GIB, CIB. And with this, let's start today's session. So today we are going to start new unit, that is your decision making. So under your module B, already we have seen how as a company we are going to select any project. Basically, if your profits are high, then you are going to accept that project. If you are going to see losses, then you are going to reject that particular project. This is what we have seen till here. But when we talk about a company, so company not only evaluates about sale price or profit, they need to also consider the cost. So in this particular unit, now we are going to talk about the cost. In your previous units, you have seen if you invest the amount, so how much cash inflow you are going to get. Through that you already evaluated in your previous units. But in any organization, you need to also see the cost that you are incurring. So under decision making, we are going to talk about the cost. And based on this cost, we are going to evaluate the projects. Chali. So now next thing, under capital budgeting, it is not only just profit, but it also includes your cost. So what products and services should be manufactured or provided by the organization? So when we are talking about the cost, in that you need to take the decision which project we need to opt, which goods we need to manufacture. Then next, what should be the price of each products or services? Price you can only see after adding your cost plus profit. Whether it is a profitable to produce internally or source from vendors. Sometimes companies are doing outsourcing. Outsourcing means in this companies are giving orders or they tie up with the next company or different companies and they are giving half of the work to them. That is what outsourcing. So whether to produce internally or whether to tie with other companies. That is what again the decision we need to take in case of decision making, or you can say in case of cost. Then whether a special order should be accepted or not, and so on. Sometimes special orders are also received by the organization. So whether to accept it or whether to continue with your daily or normal business activity. So these things are very important before you take the final decisions. So these are the few pointers. Just not the profit is the main motive, but you need to consider the cost also while you are taking a decision. So first thing you are going to talk about in this, that is decision making, includes first, that is cost volume profit analysis. Second, you can use relevant cost concepts. Then third, you can use activity based costing, and fourth, you can use ethical and non-financial considerations. So one by one we are going to see about this particular steps. So the first method that you can use, that is cost volume profit analysis. That is also known as CVP. CVP analysis is what? Now CVP analysis is that type of a method in which you are going to see what are the costs you need to incur in case of manufacturing or even in case of providing services. So CVP is good tool to assess the impact of changes in price, volume and variable cost or fixed cost. Now what is variable and fixed cost? See, cost includes two things. One is your variable and next is your fixed. Variable means, suppose we are manufacturing cold drinks. Now for cold drinks, we require water, we require sweeteners, we require flavors, we require preservatives. So if we are producing 100 bottles of this cold drink, so we require as per that all these raw materials. If we want to produce 1,000 bottles of this cold drink, we require as per that all this raw materials. है ना? If you want to just produce 5 bottles of this cold drink, what you are going to do? You are going to reduce your quantity and you are going to use only that much raw material through which you can produce 5 bottles of cold drinks. Means you are increasing or decreasing as per your volume of production. So whenever you are changing your materials as per your production, then all those different types of expenditures or costs are known as variables. All raw materials, labor expenditures who are directly working on these bottles, their payment, this raw materials are directly related to your volume of production. So these are your variable cost. Next, fixed cost. Fixed cost means taking a building on lease, taking machines on lease. So at that time, whether you do the production or not, you need to pay compulsory their rent, their interest. So examples of fixed cost like rent, insurance, or if you have taken anything on leases. So whatever payment you are doing for all different type of activities, whether you produce it or not, whether you do the manufacturing or not, you need to pay compulsory this cost. So that is your fixed cost. So under this cost volume profit analysis, you are considering what are the variable cost which actually depend on the volume of production. Next, fixed cost, which does not depend on the volume of production. है ना? Then volume, number of units you want to produce. Changes in price. Price means your selling price. If you are going to produce in bulk, so you are going to incur less cost comparatively if you are just going to produce 5 units or 100 units. So cost will also differ. Through that, your final selling price will change, because ultimately your selling price is what? Selling price is cost plus profit. है ना? So how you are going to determine the cost? First is cost volume profit analysis. You are going to see the relation between these three. So that is cost volume profit analysis. This one is your first tool that you can use. Next tool is your relevant cost concept. Now relevant cost concept in decision making is one of the other ways through which you can classify cost according to whether they are relevant or not in a particular decision. This is a car manufacturing industry. In this car manufacturing industry, now relevant cost are those type of costs which are directly involved in this particular manufacturing, like purchasing of raw material, for manufacturing of car, we require this body, we require tires, we require lights, we require mirrors. So whatever things that is directly required for your production or even for providing services, that is your relevant cost. Now, irrelevant cost is again one of the costs that you can see under this relevant cost concepts. So relevant costs are that type of cost in which you are going to see different costs which are not directly required for the manufacturing or providing for services, like paying salary to HR department, okay? Paying salary to electrical department, paying salary to finance department, because they are not directly involved in this particular manufacturing. They are the other units in any organization. So in your manufacturing unit, what are the direct costs? All the labor's cost, all the raw material cost. So these things are relevant direct cost. So you can divide your cost which are required for your production and which are the costs which are not required for your production. So if it is required, that is relevant cost, and if it does not require, then that is your irrelevant cost. You are going to see in next different terms under this relevant cost. First is your relevant cost affected by a specific decision or vary between alternatives, like petrol diesel cost in car usage. Without petrol diesel you cannot run your car, your vehicle. So that is relevant cost. Okay. Now irrelevant cost unaffected by the decision, like road tax, insurance, or sunk cost. Sunk cost means cost already incurred and irrelevant to the decision making. So irrelevant costs are that costs which will not affect your decision. So you want more petrol, less petrol, that is direct relevant cost. Okay. What is the road tax? What is your insurance? That is not relevant for your car. So that is your irrelevant cost, because through that you are not going to affect your decision. Sunk cost already which actually has been incurred, that is sunk cost or irrelevant to the decision making. Avoidable cost incurred only if a specific decision is made. If you go from that particular tool booth, then only you need to pay the charges, otherwise you can skip it. So that is avoidable cost. Okay. So next is avoidable, next is unavoidable. You cannot unavoid it. So in this unavoid, that is your incurred regardless of the decision making. Like unavoidable, the road tax and insurance, if you are going with that particular road only or with that particular highway only, then you need to pay that particular tax. That is then unavoidable. You cannot avoid it. Okay. Next, opportunity cost. The potential benefit or income loss when selecting one alternative over another, applicable when resources are scarce. Suppose you have the option A, B, C. In this, you are going to earn your income. If you select A, you are going to earn income 1 lakh. If you select B, you are going to earn income 80,000. And if you select C, you are going to earn income 40,000. So which particular project you are going to select? Of course, A1. Hana? If A is not available, then which one? Of course, B1. Because that is the next best alternative you have. In case of cost, things will be reversed. Project in which you are going to incur least cost, you are going to select that, and that is your opportunity cost. That income you are losing for choosing the next project, that is what opportunity cost. Then decision impact. Relevant cost concept simplify decision making by focusing on costs that influence the outcome and ignoring the irrelevant data. So these are the different terms under relevant cost. See, relevant cost and unavoidable cost. You can make a relation in that. You cannot avoid it. These type of costs are necessary, and your irrelevant cost and your avoidable cost, you can skip this cost. If you are not going to take that decision, you are not going to pay for that. That is irrelevant, or you can say you can avoid these type of cost. So these are the different terms under relevant concept. Next, activity based costing. This is also known as ABC. Now, if we talk about Tata car manufacturing, so they are producing different types of cars. Some are their sedan, standard model, and some are luxury, SUV, high-end models. Okay. So the same company is manufacturing standard models and luxury models. Correct? So now luxury model is very costly compared to this particular standard models. You can purchase this car for 10 lakhs, 15 lakhs, but luxury cars you require 50 lakhs, 60 lakhs, 70 lakhs, 80 lakhs. So all these things are luxury and these things are standard. or we can say these things are very basic. Now this, when same company is producing both the models, they are incurring few costs which are common in both the manufacturing. Tata Car Manufacturing manufactures both the types of models. Few expenditures are common in that. So when you are dividing this common expenditure, in that you are going to use activity based costing. So in this common expenditure, how much activity you required for this, you are going to divide that, and how much you incurred for luxury and goods. That is your next part. Means you are dividing the common activities, common expenditures among the goods, and only whatever activity that is actually incurred. See, suppose in this two particular manufacturing, like we have material handling. For material handling, total cost incurred is 5 lakhs. But for this basic or sedan cost, they incurred 2 lakhs, and for luxury, they incurred 3 lakhs. 5 lakh is total cost, but for this sedan or standard one, they incurred only 2 lakhs. For the assembly line, again they incurred common expenditure. In that, total expenditure is 8 lakhs. 8 lakhs is the common expenditure. But specifically for sedan, they incurred 3 lakhs, and for luxury, they incurred 5 lakhs. This is what activity-based costing talks about. You are going to bifurcate the common overheads. Next is your quality control activity, in which again total expenditure is 3 lakh, 1 lakh for sedan, 2 lakh for luxury cars. Next is your painting process, that is 4 lakh. So 1 lakh 50 for your standard cars, sedan cars, and 2 lakh 50 for your luxury cars. So you can see, you are seeing total cost incurred by the Tata companies 20 lakhs. But in that, for the standard car manufacturing, they are incurring only 7 lakh 50,000, whereas on this luxury car, they are going to incur 12 lakhs 50,000. That is what activity-based costing. Through this, you can identify the specific expenditure that you are incurring on any manufacturing, if you are incurring common expenses. That is how activity-based costing helps. So activity-based costing is a costing method that assigns overhead and indirect costs to related products and services. Okay? If there is a direct expenses like purchasing tire, purchasing this body, purchasing mirrors, so that is direct expenses. Indirect expenses are overheads in which you are incurring common expenses. And when you are bifurcating those common expenses based on some different factors, that is what activity-based costing talks about. So this is your next way of your assessing the tools. Now in this we have different methodologies, or we can say again different terms. Your first term is cost object, next is cost pull, and last is your cost driver. Cost object means your specific car model. Cost object, for that particular model, how much you incurred. So cost object, item for which the cost measurement is required. For your particular sedan car, how much you incurred, your cost. That is your cost object. For particular luxury model, how much you incurred, the cost. That is what cost object. Luxury model is your cost object. Your standard car is what your again cost object. Next is your cost pull. Now in this cost pull, you are grouping the expenses. You are making a group of expenses that incurred on a particular activity. So like example, like all costs related to a car assembly, like labor, material, electricity used for assembly. What are these individual expenditures you need for completing any task? Like for car manufacturing, you incurred labor, material, electricity in your assembling unit. So that is your cost pull. A grouping of expenditure. Okay, all the relevant grouping of your expenditure is your cost pull. Cost object means particular model. Okay, we are talking about particular unit. That is your cost object. For manufacturing it, how many different costs we need to incur when we are grouping it? That is cost pull. We have a box, in that we are telling that we require material, we require labor, we require assembly, we require quality check. So whatever cost you are incurring, that is your cost pull. Last is your cost driver. So any factor that causes a change in the cost of activity. So basically this is further divided into resource cost driver and activity cost driver. Resource cost driver means the quantity of resources consumed by an activity. Like for manufacturing a car, how much machine hours we require. Okay. Number of customer services calls. So for handling any cost in which you can identify the quantity of resources consumed by an activity, that is your resource cost driver. And next is your, under this only cost driver, that is activity cost driver. This is the production, marketing or research expenses. Particular activity expenses. For research, for quality check, for assembly, that is your activity cost drivers. So like for car production, you require number of loan application processed in a bank, number of car produced. For specific activity, when you are identifying the cost, that is activity cost driver. When you are identifying the resources that you are going to use, in that how much you are incurring a cost, that is resource cost driver. So under cost driver, we have again two bifurcations, resource cost driver and activity cost driver. So these are the three different terms under your activity based costing. One is your cost object, cost pull, cost driver. Chaliye. So now let's start with few questions. Question number 1. A cost driver is an item of production overheads, B, a common cost which is shared over cost centers, C, any cost relating to transport, D, an activity which generates cost. Cost driver means an item. Production overheads? No. A common cost which is shared over cost centers? Again, no. Any cost relating to transport? No. An activity which generates cost. That is your cost driver. Again, cost driver is bifurcated into two, resource and activity. Next, which of the following statements is correct? Good quality and lower prices are generally considered as the criteria for decision on import substitutes. B, if the product is for mass consumption, the price and demand elasticity is normally too high. And C, relevant cost is not a fixed or one-time concept, but a concept relevant at a given time for a given situation. Or D, all the above. Tell me which statement is your correct statement. So correct statement is your all of the above. Good quality, lower prices generally considered for your decision in your manufacturing. Then if the mass consumption, price and demand elasticity is normally high, and relevant cost not fixed or one-time cost, it is ongoing cost that you need to incur again and again. So the correct answer is your option D. Next, steps in ABC analysis includes identification of activities and their respective costs, identification of cost driver of each activity, computation of all allocation rate per activity, allocation of overhead costs to product services based on the activities involved. D, all of the above. So steps involved in ABC analysis includes your all of the steps. Next, which of the following statements are true? Activity-based management involves activity analysis and performance measurement. Activity-based costing serves as a major resources of information in ABM. So, options are first true, second false. B, first true, second true. Third is first false, second true. D says first false, second false. So, tell me, which statement is your true in this? So, the correct answer is your all of the means both these statements are true. Okay, so with this we complete your one more unit with revision, but remember in this they are asking different types of questions. So if you want to cover more concept, then you can visit to Adda 24/7. All courses, JIB, CIB and CIB June 25 is your attempt. So these are your concept batches, bonus batch, bilingual, bonus batch, this one is your English medium. But remember, if you want to prepare for your CIB from A to Z, your concepts also, your crash course also and your revision also, then the perfect batch is your CIB Mahapath 2.0. In this you are going to receive 500 hours of online live classes, mock test, e-books and videos also. Now if you purchase it today, see, you are going to receive 78% if you are not using one special coupon code, that is your Y8 Y895. As soon as you are going to apply it, you can see your discount amount increases up to 80%. And if you purchase the same batch from Adda 24/7 application, you are going to receive 1% extra, means total 81%. And by this coupon code, you are also going to receive double validity. Okay, so try to purchase it as soon as possible and start your preparation early so that you are going to get the chance of revision also before your exams. So thank you everyone for joining this session. Bye-bye and take care.